Good morning. This is Bloomberg Daybreak Europe. I'm Šimonytė in Dubai, and these are the stories that set your agenda. Donald Trump is found guilty on all 34 counts in a hush money trial, becoming the first former U.S. president to be convicted in a criminal case. Crucial data on both sides of the Atlantic. Investors watch for the Fed's preferred inflation print, and the May CPI reading for the euro area will preview the numbers. Plus, Bloomberg reveals that U.S. officials are slowing AI chip exports to the Middle East amid a national security review, sending shares of Ingrida and AMD lower. All right, let's get right to it and get a check on how some of these key market financial assets are trading. And you can see the picture is one of risk off. The handover from Wall Street yesterday, not so pretty once news emerged that the U.S. were considering restrictions on some of these key chip maker supplies to the Middle East. We saw the likes of Nvidia drop 3.5%, AMD as well. One of the reasons why Nasdaq ended the session down more than 1%. Today, you can see that the picture is still not pretty either. Euro stocks in Europe seen also opening up slightly weaker, moderately so, down about 6 basis points. FTSE similar, but of course the Nasdaq still seen dragging. In terms of other assets that we're looking at this morning as well, a lot of eyes still on what's happening with U.S. Treasuries, sitting at 4.54%. We rallied 5 basis points with that risk-off move yesterday in the U.S. session. Euro in focus, we have that CPI data coming through. It's not just the core PCE number that we're looking for today in the U.S. Also, European CPI data is what we're watching out for at 10 a.m. London time. Gold also back in the picture again, coming off record highs last week. It's still up 14% for the year, inching out, eking out some gains by the end of this week, but of course has been a major recipient in terms of safe haven flow and also on expectations of easier monetary policy coming out of the Fed. And then finally, Brent, all eyes on the energy complex into that OPEC Plus meeting. We will be talking more about that throughout the course of this show. But for now, let us see how Asian markets are faring with Avril Hong in Singapore. Avril.
Yeah, Jumana, we are seeing risk off elsewhere, but in the Asia Pacific, somehow it is risk on. The stock benchmark is snapping 3-session losing streak. The gauges are also rising. It is another case, as I mentioned previously, of bad news for the economy being good news for markets. Perhaps that optimism that we'll see more policy support, whether it's because of that softer US GDP print, prompting bets of Fed easing, or China's PMIs on the factory activity front really missing the mark. Potentially that might prompt some expectations of how the stabilization for the property sector might be a bit more forceful. So this is what we're seeing among stocks. But let's flip the board and take you to some of the other assets that we're keeping an eye on, because today we also got those Tokyo CPI numbers and the gauge rose, and this was driven mainly by the renewable energy surcharge. Not quite because of the wage growth prompting service inflation that the BOJ wants to see, but it's still Tokyo CPI rising, trending in the right direction. So this could prompt potentially that nationwide price trend next month to also re-accelerate. And that seems to be spurring bets that we'll see the BOJ, continue to mile those rate hikes in the next couple of months. The pressure is still on the Japanese bonds. We're seeing the yen moving closer to 1567 against the dollar. But all things considered, you're seeing dollar China, dollar yen moving fairly sideways in anticipation of that core print from the US. Let's flip the board and take a look at what we're seeing in China on the manufacturing PMIs. It really missed the mark. This was the biggest miss in more than a year. If you look at the sub-indices, it is coming through from a slowing in output and new orders. And why this is raising concerns that slowing in factory activity is because this is a sector that the authorities have really been relying on to drive growth. And there are also some lingering concerns as we head into those U.S. elections. We might see a ratcheting up of trade tensions that could put further pressure on manufacturers. Jumana.
Definitely something to watch out for. Avril, thank you so much for the overview. That was Avril Hong in Singapore. Our top story today, Donald Trump has been found guilty in the first criminal trial of a former U.S. president in the nation's history. A New York jury convicted him on all 34 counts in a hush money case. It is a verdict that could reshape the political landscape 5 months before Election Day.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. But the real verdict is going to be November 5th by the people.
All right, let's get more on this moment in history. Bloomberg's Kriti Gupta. Kriti, I mean, a good place to start would be for us to talk about exactly what President Trump has been charged with, and then what happens next.
Yeah, so this is 34 counts, as you mentioned, of falsifying business records to hide a hush money payment to the adult film star Stormy Daniels, about $130,000. The argument that the prosecution is making here is simply that this was crucial information that the voter base needed in 2016, determining his character, determining if they wanted someone to be president. Of course, that has been now confirmed by about the 12 jurors unanimously in this trial. What happens next is a little bit hazy here. The next steps here are going to be the sentencing on July 11th. Remember, that is just 4 days before the Republican National Convention, where the GOP will officially likely confirm President Donald Trump as their nominee. But remember, it is already expected that he is the presumptive nominee ahead of the show-off with Joe Biden. So really, it's now a question of what does that sentencing actually look like? He is eligible for up to 4 years in prison at this moment.
And of course, if that does happen, if he is sentenced to prison, the expectation is that they would appeal. And then the next question becomes, how long does that appeal process run for? But more immediately, Kriti, let me just ask you, how is it likely to affect Trump's actual presidential run into this round of elections?
Well, if you look at the polling, it's a little bit split here, because if you look at Democratic or independent voters who have actually compared the actual policies between Trump and Biden, looked at them and said they're pretty similar, they have said that a unanimous verdict from the jury on this particular trial could sway their minds. However, we have seen historically, going into some of his criminal investigations, even including the case against him that he was a part of the Capitol rise in 2021, or at least encouraging them, and that would be the one that would essentially eliminate him from the presidential race. Even in the face of that, you've seen the Republicans that have rallied around him really say, look, this is actually more a reflection of the justice system than any wrongdoing on his part, and still lead in the polls, to the point that the GOP is still prepared to make him the nominee.
Kriti, thank you so much for the overview. Such a huge moment in U.S. political history. Well, investors are looking ahead to the release of the Fed's favored price gauge for more clues on the path for interest rates. Dallas Fed President Lori Logan says high rates may not be restraining the economy as much as policymakers anticipate. By contrast, New York Fed President John Williams says there may be enough evidence that policy is working on bringing inflation down.
Looking at this broader context, the behavior of the economy over the past year provides ample evidence that monetary policy is restrictive in a way that helps achieve our goals. We're seeing clear and consistent signs that the imbalances between supply and demand in the economy are receding, and we've seen a broad-based decline in inflation.
All right, let's broaden out the conversation with Bloomberg's Jill Deese. Good to see you, Jill. So Williams seems pretty convinced that the interest rate level is where it needs to be in order to start bringing down inflation. The question is then, where does he expect inflation to end up, given how restrictive rates are?
Well, Jumana, nothing super surprising out of Williams here, but he did say ultimately that we're looking at maybe 2.5% by the end of this year. Still, obviously, well outside of the 2% inflation target that the Fed has really set. He actually said he sees that as more likely by the end of next year. I think what this is all really telling us is that, we're still seem fairly on track for at least one Fed rate cut this year. That does seem to be, something that we've been getting out of all of this Fed speak recently. But obviously, Fed officials aren't necessarily going to wait for inflation to fall back down exactly to target before they actually start making those cuts. What we need to look for is, as a lot of these Fed officials have been saying over the past several weeks, is this idea of several sustained months of favorable inflation data that actually shows that they're making some progress, that they're actually trending toward those targets. We'll see what the latest PCE gauge is ultimately going to tell us later today. As you said, that's really the the Fed's favored inflation gauge here. Bloomberg Economics is thinking that we're actually going to see the slowest monthly increase there it's all year in April. So that would indicate that there has been some level of progress that we're continuing to make. And what we've heard from a lot of Fed officials over the past few days, over the last week or so in particular, is that they really kind of want to see that sustained cooling in that inflation gauge over the next several months as they kind of fine-tune exactly when they may be making that first cut.
Yeah, I mean, the skeptic in me still says that core PCE is still very uncomfortably close to 3%, even if it comes in at 2.7. So let's see how markets react. That was Bloomberg's Gerald Decius. Thank you so much. Now, the South African rand dropped more than 2% yesterday after projections of election results showed the ruling ANC falling well short of a parliamentary majority, leaving it to seek a coalition to retain power. Bloomberg's Jennifer Zabazaja is at the National Results Center in Midrand. Jennifer, it seems like just over 51% of the votes have been counted. It does not appear to be looking good for ANC at this point.
Exactly, Jumana, and that's really the sentiment that we are sort of feeling at this point in time, and really the discussion right now. And not just that, it's surprising just how wide of a margin potentially that the ANC could lose than predicted. But really the other story here, too, is really the votes that were taken from the ANC to former President Jacob Zuma's MK party. So right now, you know, the MK party is tracking to be the third biggest party with support in terms of, the support in the rural areas and, did surprisingly well in a lot of the rural parts of KwaZulu-Natal. And that was seen as, a cautionary area, potentially dangerous area for the ANC. They were concerned about that going into this election. And so the question is, does this continue to hold out as we get more votes in? And we should caveat this by saying, and you mentioned this in the intro, just over 51% of votes counted. The Election Commission here is anticipating that they'll be able to finish tallying by Sunday. So we could see the ruling party get back support, in particular from here in Gauteng, which is one of the most populous provinces. But clearly, and I know you were speaking to a guest earlier today, this seems to be a referendum from a lot of the rural voters here in South Africa concerned with the direction of the economy and really potentially what the ANC, the ruling party, has done over the past few years. And the question is which partner, if they are to start what is likely to be a new era of coalition government, which of these opposition parties they will team up with.
Yeah. And that is the big question. Certainly does appear to be a referendum on ANC at this point. Bloomberg's Jennifer Zabazaja, thank you. Yeah. Also coming up on the show, U.S. officials slow AI chip exports to the Middle East, citing national security concerns, with Nvidia and AMD said to be affected. We'll bring you the details next. Plus, catch our exclusive interview with Lithuania Prime Minister at the Shangri-La Dialogue on the Baltic countries' strategic defense plans. That's later this hour. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Bloomberg understands that U.S. officials have slowed the issuing of licenses to chip makers like Nvidia and AMD for large-scale AI accelerator shipments to the Middle East. The move comes as officials conduct a national security review of AI development in the region. Let's get more with Bloomberg's executive editor for Asia Technology, Peter Ahlstrom. Peter, really interesting report that Bloomberg put out overnight. Maybe just tell us a little bit more about why the U.S. are apparently slowing down these export licenses, granting of these export licenses. What is the reasoning behind this move?
Sure. It's important to distinguish between what the U.S. is doing here and what it's not doing here. It is not stopping the shipment of these AI accelerators into the Middle East. It's slowing them down. As you mentioned, they want to do a national security review of exactly where they're going, what they're being used for, what kind of applications are being developed by some of these Middle Eastern companies. So it's a critical step for them to understand exactly what's happening. AI accelerators come from primarily NVIDIA Corporation, which has become such a dominant player in AI chips. They're used to train these AI models and then run the AI models after that. AMD is also a player here, but a much, much smaller player at this point. What we saw in 2022 is that the U.S. put export controls on the export of these chips to China in particular, and some of the other rivals, including Russia. After that, we saw this huge development of AI technology within the Middle East in particular. Many different areas. U.S. is getting a lot of this money. China and the U.S. were really the primary development hubs in the past, but more recently we've seen this big increase in the amount of investments in the Middle East. They're starting to buy these AI chips, and the complexity is that it's not exactly clear how those AI applications are going to be used and who they're going to be used for. In the Middle East, often these companies will be working with, say, Chinese companies or other companies too. So the U.S. is now trying to understand exactly how these AI chips are being used, especially the high volume shipments that you referred to, where they're going to go before they grant more licenses to the likes of NVIDIA and AMD.
Yeah, earlier on in the show, and obviously we're Dubai-based, we were talking about the geopolitical impact it's going to have on the region. But we did see quite a big down move yesterday for NVIDIA. Rare for NVIDIA to sell off, but it was down more than 3.5%. What does it mean for the companies involved?
Yeah, NVIDIA, of course, has been a rocket ride for the stock market over the past couple of years. It's now a $2.7 trillion company, so truly a favorite of investors. NVIDIA says, Jensen Huang, the CEO of the company, has said that they can sell as many of these AI chips as they can possibly build at this point. Their biggest four customers are all the big American tech giants led by Microsoft and Google in particular. It's also selling into other regions around the country. So their sales into the Middle East are not a significant part of their sales at this point, and they certainly are going to be able to find alternatives for them. The smaller players, AMD is just getting into this market, is trying to gain some ground against NVIDIA. There's some others like Intel that are also trying to get into this ground. But for them, it could mean a little bit of a slowdown in sales, and may also just extend the time horizon so that they're able to sell into the Middle East in the future rather than right now when supplies are actually so tight.
Yeah, such an interesting story. We're going to keep monitoring. And of course, we just put up the close there for NVIDIA, ended down more than 3.8%. That was Bloomberg's Peter Elstrom. Thank you so much. All right, coming up, Europe's power grid needs a $640 billion upgrade. We'll look at the massive finance challenge to achieve net zero by 2050. That's coming up next. This is Bloomberg. OPEC Plus delegates have told us the group is moving closer to an agreement on oil output cuts that may stretch into 2025. Let's get more on this story ahead of Sunday's meeting with our Middle East energy markets reporter Anthony DePaula over here with me in Dubai. Anthony, interesting story from our Bloomberg team overnight that they are considering the extension of these production curbs all the way into 2025. Does that tell us, if they do go ahead, obviously it's not confirmed, but if they do go ahead with that, it is a reflection of how weak they see the global economy?
Yeah, well, we're already seeing signs that the market's going to look weaker next year, and a lot of the analyst forecasts are for prices that will be lower on average next year than this year. So there are concerns about the strength of demand growth. So we are expecting demand to continue growing. We've seen annual records for demand, so that's expected to keep going. But it's the question of how much it's growing and also how much other capacity is coming online, because we've got strong growth this year in the U.S. We've had some growth in Brazil, Guyana. So there are other supplies that are coming on. Plus, some of those OPEC countries have some substantial capacity that's underused that they want to produce. So some of those countries are even producing more than they have pledged to. They're supposed to cut back on that, but we'll see if that happens. So these are some of those issues.
Spare capacity, building U.S. inventories. But let's talk more about the demand picture. This morning, we had some weaker factory data coming out of China, and the signals coming out of China the last few months have not been so positive. How is that likely to impact the outlook for oil?
Yeah, well, for example, there's some weakness on the diesel market, and that's a major fuel for transport, for industry. So when the product markets go down and the refiners need to produce and sell less of that fuel, of course, they're going to ask for less crude oil. from the producers here. So that's going to impact the demand that factors through. We are seeing in these current months lots of oil on the water, lots going to Asia, and so that supply coming in is going to decrease some of the demand there. This is a big demand period for the Middle East, so we do see lots of demand for oil burning in power stations, for example, during those summer months before it tapers off, plus the U.S. driving season. Of course, a lot of those things are bought months in ahead, so the traders are already starting to look at some of those weaker months going forward as we come out of the summer.
Also, one thing to bear in mind is I've been reading about China building up their own stockpiles, something to bear in mind too. Thanks to our Middle East energy markets reporter, Anthony DePaula. All right, time now for our weekly deep dive on the green energy transition. One of Europe's biggest challenges on the road to net zero is building more power lines and the vast investment that is needed. Let's get the details with Sanjit Sangera, head of grids for Bloomberg NEF. So let me just start off by asking you how much Europe is going to have to spend on these grids to meet those climate targets.
Well, last year, Europe spent about $50 billion investing in its electricity grid. So that's the infrastructure needed to transport power from where it's produced to where it's ultimately consumed. That's already been trending up. Out to the end of the decade, we see spend needing to double. And so that's a total spend of $640 billion and doubling spend up to over $100 billion. I think what's even more interesting, though, is that this spend profile, if you look even further out, has a second cycle of spend that happens after 2035, which is actually triple today's level. So you end up with these kind of two discrete cycles of investment that's needed to build out this net zero power system.
And is it a case of just expanding the grid to accommodate new renewables? What about other electrification efforts like more EVs needing to be charged?
So, yeah, it's a bit of both, renewables and EVs. I think what's interesting is when you look at this first spend cycle, renewables really take the front seat. They're the dominant segment of spend. They're about 40% of the capital expenditure is needed to just integrate and host new renewable energy capacity. After 2035, you end up with EVs, electrification of industry, and just general load growth being the driver for the investment on the electricity grid. So when you zoom back, you end up with this double peak spend profile, the first being about decarbonizing the energy generation, and the second spend profile more about electrifying into that decarbonized green energy.
Yeah, well, you know, the $1 trillion question, and it really is the $1 trillion question, how is all of this going to get financed?
The financing question is one that's top of mind, both with governments and utilities. I think one interesting way of looking at this data is by normalizing the capital expenditure per year by the amount of consumption there's going to be in each year. And when you see that, you see that the rate pressure is really at its highest this decade, and then it falls out to 2050 because there's just more consumption to pay for that good investment. This is part of why the investment levels in China look lower uniquely in this type of visual as opposed to others. So what that means is that long-term loan programs, deferral accounts, an ability to be able to move some of that investment that's going to be needed this decade into the later half of the transition to 2050 is what's going to be an important part of financing this investment.
So interesting. Sanjit, thank you so much for joining us today. That was Sanjit Sangera, Bloomberg's NEF's head of grids. And if you would like to hear more from BNEF's analysts, to download the Switched On podcast on Apple, Spotify, or wherever you get your podcasts. We're agnostic. All right, also coming up on our show, Donald Trump found guilty on all 34 counts in his hush money trial, a verdict that could reshape the U.S. political landscape ahead of the presidential election. We'll bring you the latest next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Šimonytė Versace in Dubai, and these are the stories that set your agenda. Donald Trump is found guilty on all 34 counts in a hush money trial, becoming the first former U.S. president to be convicted in a criminal case. Crucial data on both sides of the Atlantic. Investors watch for the Fed's preferred inflation print and the May CPI reading for the euro area. We'll preview the numbers. And OPEC Plus is moving closer to an agreement on oil output cuts that may stretch into 2025. We'll look ahead to this weekend's meeting. Let's get you caught up on markets before we move on with the show. Taking a look at some of that risk-off that transpired in the U.S. session yesterday. Wall Street taking a bit of a turn south. NASDAQ ending the day more than 1% lower on back of some weakness in the chip makers that transpired on back of that Bloomberg story suggesting that U.S. are reviewing or slowing down licenses for some of the key chip maker sales into the Middle East. Big story that came out overnight in the chip space. Today, you can see the NASDAQ is seen opening down about 0.3%. S&P futures as somewhat weaker as well. Similar for the European markets as well. In terms of other assets we're looking at, all eyes on those U.S. Treasuries. 10-year yield sitting just above 4.5%. We rallied back about 5 basis points yesterday throughout the course of the session as risk-off became the number one theme and the dominant theme of the afternoon session. Euro trading sideways. Gold in focus, coming off record highs, but still somewhat greener today. And then Brent, $81 is where we're at, just shy of $82. Big meeting coming up for OPEC Plus this Sunday. But returning to our top story right now, Donald Trump has been found guilty in the first criminal trial of a former U.S. president in the nation's history. A New York jury convicted him on all 34 counts in his hush money case. Manhattan District Attorney Alvin Bragg, who brought the case against Trump, spoke after the verdict was handed down.
While this defendant may be unlike any other in American history, we arrived at this trial and ultimately today at this verdict in the same manner as every other case that comes through the courtroom doors, by following the facts and the law and doing so without fear or favor.
Major story. Let's get more with Bloomberg's Kriti Gupta. Kriti, and we'd all been watching this court case play out over the course of the last couple of months. Many people were paying a lot of attention to what key witness Michael Cohen had to say, former Trump ally who moved against him. Give us a few more details about how this court case came to be and how the jury came to this ultimate conviction.
Yeah, Jumana, this is, as you said, a allegation here of 34 counts, or a conviction, I should say, of 34 counts of falsifying business records around a hush money payment to adult film star Stormy Daniels delivered by Michael Cohen himself, the right hand of President Trump, to the value of about $130,000. Now, here's what's important about it. This is where Michael Cohen has really proved to be the prosecution's star witness in terms of saying, hey, I delivered this payment, and therefore I can prove that it is indeed true. The concern from the prosecution was simply that this was vital information that was needed for the voter base ahead of the 2016 election to actually be able to cast that vote. That hush money payment, on the other hand, hid the fact of Donald Trump's true character. At least that is the case that the prosecution had made. Now, when it comes to the star witnesses, like I said, Michael Cohen was a real game changer in this case. The other key people you need to know is Alvin Bragg. He is the lead prosecutor on this case and has been in the New York state attorney for a very, very long time. This is a crucial point in terms of when it comes to the bias that President Trump is alleging exists not only within the prosecution, but within the judge himself. Juan Merchant, by the way, has been not only the judge on this case, but a judge on other cases around President Trump as well. So there has already been moves by the Trump defense to remove Juan Merchant from the case, of course, proving to not come true.
Let's talk about what happens next. We know the sentencing date, now a crucial date in our diaries for the summer, is July 11. What happens if President Trump is actually sentenced to jail?
Well, the sentence could be as up to 4 years in prison time. The likelihood of that is quite low, though. And there are a couple of factors here. One, for just kind of the lack of a roadmap, lack of precedent around this case, especially when we're talking about a candidate for president as well as a former president as well. There are security concerns that Juan Merchan, the judge, of course, presiding over this case, has already indicated is going to be a part of his thinking, but also things like his age. President Trump's age is going to be a big one, not to mention the impact on the wider voter kind of rhetoric, especially going into the election. Jumana, just for some context for a financial audience, this is the same case around the Federal Reserve not making any sort of decisions or any sort of moves ahead of the election because of how it changes the voter demographic. But you said it right. July 11th is the date. It also comes just 4 days before the GOP convention. So that's going to be crucial when it comes to potentially what the timing looks like and whether or not Juan Merchan actually decides that an appeal would be valid in the situation.
And Kriti, let's also just remind viewers that this isn't the only case that is ongoing versus the former president. There are 3 other criminal charges that are still being brought against him. So what is the status with the other 3, and what should we be watching out for over the course of the summer as well?
Well, so we have to remember that this case in particular is brought on violations of state law, not federal law. So even with this criminal conviction, he is still eligible to run for president. That is not the case, Jumana, with some of his other trials that are going on. We're talking about cases in Washington, Georgia, Florida that are on allegations of treason. And remember, in the Constitution, it said if you are convicted of treason, you cannot run for president. These are allegations around the Capitol riots in 2021, whether or not he actually supported it via social media, whether or not he instigated it, etc. Also, the accounts around hiding classified records, taking them out of the White House into his Mar-a-Lago estate in Florida. Those are the cases that we are still waiting to hear from, and that could potentially affect his presidential run more so. But Jumana, as we talk about the polling, as we talk about public sentiment around this, you can see that his Republican base has only gotten bigger despite some of these allegations.
Truly remarkable. Kriti, thank you so much for the very extensive overview. Bloomberg's Kriti Gupta. Now, turning back to markets, treasuries and the dollar are steady ahead of the release of the Fed's preferred inflation gauge later today. Anyone's guess what that is? That is the core PCE indicator. For more, let's bring in our MLive executive editor, Mark Cudmore. Mark, good morning to you. Good afternoon, I should say. Good to have you with us. Let's just talk about this PCE number. The expectation is that it's going to slow to its lowest monthly pace for the year, but annualized, we're still looking at a 2.7% print. That is still uncomfortably above that 2% target.
Yeah, look, the backdrop here is we still have sticky inflation. That's going to remain the case for a long while to come because not only is the service component sticky, which we've known for some time, but we're getting reinflation in the more volatile goods component because commodity prices are high, shipping prices are going back up as well. But from markets' point of view here, what is going to be interesting is that if it's a soft print, which some of the high-frequency data, the Cleveland high-frequency data might indicate, well, then we'll get kind of a big dip in yields. If it's a hot print, the rise in yields will probably be greeted by quite a bit of demand in the short term, as in the dip in treasuries will likely be bought. Why is that? Well, because we've got month-end rebalancing, and given the relative performance in stocks this month, there's a bunch of flows to go into bonds almost regardless today. So it's just about what level they buy those bonds at. Now, the bigger picture backdrop is there's still upward pressure in yields, but I'm saying short term, whatever happens today, there is some demand to buy treasuries.
Mark, let's turn to one of the big events this week in Europe. We've got ECB on Thursday, and the expectation is that they may actually start their rate-cutting cycle. But it feels as though many within the investment community have dialed down their expectations of how many subsequent rate cuts the ECB are going to go for. What do you think is on their minds?
I mean, I'm with the kind of consensus that there needs to be less rate cuts. In fact, I think the market has not gone far enough. I think we're going to still price out more rate cuts from the ECB. Of course, they're going to deliver next week. They've so pre-committed to this. And I think they want to deliver more cuts. I think that Christine Lagarde leads a dovish component in the ECB. And that kind of reaction function is dovish there. They want to support growth. but it's going to be pretty difficult for them. The fact is that German growth and likely European growth has kind of bottomed. It's not a particularly positive story, but we're getting less pessimistic about it. And inflation, again, is not going away. There are global issues there, along with the kind of sticky inflation that we're seeing everywhere. So in reality, I don't think the ECB will deliver as many cuts that are still priced in the market, which means the theme of upward pressure in yields is global. It's not just a Fed story. It is all around the place. ECB will continue to price more rate cuts than elsewhere, but it's a story where those rate cuts are overpriced at the moment.
And to your point about global yields moving higher, let's not forget about JGBs. They keep inching higher and higher, closer to where you are. Mark, thank you so much for joining us on the show. That was MLive Executive Editor Mark Cudmore. Also coming up, we talk to Lithuania's Prime Minister at the Shangri-La Dialogue on Defense in Singapore. That is next, and this is Bloomberg.
With the economy coming into better balance over time and the disinflation that's taking place in other economies, reducing inflationary pressures on the U.S., I expect inflation to resume moderating in the second half of this year.
Well, that was New York Fed President John Williams there, speaking about the impact restrictive rates are going to have on inflation. Speaking of inflation, we have that PCE print coming out later today. Let me show you one of the charts that we've been watching into today's print, because the expectation is that it will be dropping. It will be likely moderating to the slowest monthly pace this year, around 0.25% month on month, which probably keeps the annualized rate at around 2.7%. And this is what core PCE has looked like and how the chart has progressed over the course of the last 6 months. You can see the trend is downward sloping, although it has been stickier than some would have hoped for. The other chart we're watching out for today is oil. And take a look at this. This is positioning in oil futures, and it tells you that bearish positioning, i.e. speculators who are positioning for lower prices in oil, that positioning has reached the highest level since 2020. So quite extreme bearish and shorts building up in that market, which means there could be a bit of a squeeze if there's a hawkish surprise out of OPEC Plus this weekend. But plenty more coming up on our show. This is Bloomberg. U.S. President Joe Biden says Ukraine can launch U.S.-provided munitions against some military targets in Russia. This comes after mounting pressure from Ukraine and allies. Russian gains in Ukraine are fueling greater fears about Moscow's intentions, particularly in the Baltic region. It's a topic of discussion at this year's Shangri-La Dialogue in Singapore, an annual gathering of the world's defense officials. Bloomberg Markets Asia anchor Haslinda Amin is there with a guest.
And Jumana, according to my guest, it is crucial that Ukraine wins the war. With me is Lithuanian Prime Minister Ingrida Šimonytė. Good to have you with us. Hello. As you said, it is important that Ukraine wins. The question really is how?
Well, we all know how, or at least we all know what we have to do to help Ukraine to win the war, because we see that the determination of the country and of the nation to fight back for its sovereignty and territorial integrity is there. It was there despite of the doubts and problems we were having on our part with provision of particular weapons or further support, with debates in Congress about the support package for Ukraine that finally was adopted. So we know this is there. So what we need to do, we need to provide Ukraine with all the help that we can. And on the other side, we need to reduce the capacities of Russia to continue the war with sanctions, with restrictions to gain money from the democratic world to finance this brutal war in Ukraine.
You talk about how you need to give the assistance that Ukraine needs. Quantify that for us. Who should it come from? Are you talking about what the U.S. can possibly do?
Well, the level of support so far, the military support, differentiate very much across the countries. For example, for Lithuania, this is a number that ranks 1% of GDP, I think. But you can imagine that we are a small country, so even 1% of GDP for us is not a huge number in terms of actual nominal value of of the support. Then when we compare what other countries are doing in terms of their capacity, so in terms of their GDPs, the ratios would be significantly lower. So there were different calculations saying that if everybody is providing at least 0.25 or 0.5% of their GDP in the democratic world, then that would do a very big difference to what it is there. Because now it looks like smaller countries tend, of course, and this is natural because the ratio, it is a ratio that is calculated based on the value of ammunition or weapons to the country's GDP. In terms of the volumes, of course, US and Germany are providing big amounts of the support, but I think each and every country can do more. Sincerely, just look at what is doable and do more.
Lithuania is mulling training troops on the ground. What's the thinking behind that? Is it something that Ukraine has asked for?
Well, this is a long-standing exercise where we train the Ukrainian soldiers. We've trained them before this invasion, and this is a long-lasting cooperation between our military forces and Ukrainian military forces, and we train them in the third countries, we train them in Lithuania. If need may be, we would train them also in Ukraine in partnership with other countries who would be willing to do so.
At this point in time, how are you assessing the prospects of a win for Ukraine?
Again, it depends, I think, largely on us.
The war has gone on way longer than people anticipated. We're into the third year.
Yeah, because along the way, we are in the third year of this invasion. Along the way, there were more than needed episodes of hesitation in democratic world about whether we can provide, whether Ukraine can withstand this. We were never in doubt. We were always certain that Ukraine will fight back, and all that we need to do is to provide Ukraine with all the support that is there. But of course, the capacities, the capabilities of smaller countries are significantly smaller than those of the bigger countries. And it took quite a while for countries to think, can we provide a long range? Can we provide the heavy vehicles? Can we provide this? Can we provide that? Will Ukraine be able to defend itself? And we see it is able. In the third year of this invasion, they are still standing and holding the line. So I think it's our moral duty to do what we can. And this directly depends on us.
Lithuania says that it is NATO that's keeping it safe, Article 5. It is among countries in the Baltic region that's vulnerable to Russia's imperialist goals. How are you looking at how NATO can act to prevent such things from happening for the rest of the countries?
Well, I think it's two-way street. It's not only NATO as an alliance, but also each and every member of NATO. And I think we were among the first who sort of learned the lesson from 2014, who've increased our defense spending up to 2% of GDP, and now we're close to 3%. And this will continue for I think, a very long period of time, because we think that Article 3 comes before Article 5. You need to be mindful of your defense and security yourself. Then you can rely on your partners. But I think also the mindset of our partners, who were quite reluctant to increase their defense spending before this invasion, is changing dramatically. And what we see now, we see countries, country by country, planning to increase or increasing their defense spending. We see a commitment of German government to locate a permanently stationed brigade in Lithuania. Other countries are increasing their presence on the eastern flank. And this is what it's all about, because the eastern flank, due to its geographical proximity to country that cannot sort of get well from its imperialistic ambitions and cannot sort of live with the idea that countries can decide for themselves because it thinks it can decide also for the others. This country is a threat, and now we have an agreement on this. And if we have an agreement, then we need to adapt our actions accordingly. We had new 2 members of NATO, Sweden and Finland, recently joining, something that maybe was not in debate 5 years ago, and now it's a fact. So the whole situation across the Baltic Sea, the whole security of the Baltic Sea region has significantly changed, and this is for good.
Trump in the news today, convicted of all 34 counts, but it doesn't necessarily stop him from being the next president if he wins. And now we know that Trump has said that he may be less committed to NATO. What are the prospects like? How are you assessing a possibility of that happening?
Well, I think in politics, you hear quite a lot of rhetorics that you are not sure what part of it you need to take into account seriously, and what is the real thinking behind the rhetoric. So it happens. And I remember the debate about NATO that happened during the term of President Trump in office. And that was a very right remark for Europeans that, look, you have to be mindful yourself that Russia is in Europe, as a matter of fact. And this is in the closest proximity to European countries. So you need to take your commitments to NATO seriously, not just rely on US security guarantees. Not all of the countries have heard the message. For us, that was clear, and we did not need President Trump's remarks about that. We made this decision ourselves because Russia invaded Donbass and annexed Crimea. And that was very clear wake-up call, and the politicians in the countries of Baltic states, they managed to agree on this. But not all of the countries. And now we are in the third year of the full-scale invasion. And this changed the mindset, I think, of most of the countries in the alliance, most European countries in the alliance, new countries joining, defense spending increasing, interoperability, sort of commitment for collective security and defense becoming stronger.
Prime Minister, we have the European election coming up. What's at stake? How much is at stake?
I think lots of it is at stake because Ukraine relies not only on support of allies like US or particular countries who are able to provide significant amount of weapons and munition, but also on financial support. Where European Union is a very important agent, very important actor to play, because we provide as Union quite a significant chunk of money for Ukraine to be able to meet its daily needs. Because it is important, states need to be run and pensions need to be paid and teacher salaries and everything. So EU is a very important partner. It cannot tire. It cannot think that we have nothing to do with it. So the leadership of EU Commission, Commissioner, President of the Commission, Ursula von der Leyen, I think, should stay there.
All right. Prime Minister, we have to leave it there. There you have it. Prime Minister Ingrida Šimonytė, of course, Lithuanian Prime Minister, giving her assessment on the outlook when it comes to Ukraine. Jumana, handing it back to you.
Jacinda, thank you so much for that interview. One line in particular really stood out from that interview, and the fact that she said security in the Baltic has completely changed. In response to Jacinda's question about NATO and the need for that Article 5 defense system to be beefed up also by some of the European nations as well. So really interesting commentary there. Also saying that help needs to come not just for Ukraine, but in terms of applying more sanctions on Russia. That is it for the show. But later today on Bloomberg Television, do not miss our interview with the Delta CEO, Ed Bastian. That will be done live from Dubai by our colleague Guy Johnson ahead of the IATA AGM. And coming up next is Markets Today. This is Bloomberg.